So let's do that one more time, shall we? Good morning, good afternoon, and good evening to all the amazing people who have joined us today, and all those that have signed up for this event but not able to join us live. Well, you're going to miss out potentially on asking live questions. But anyway, we are just happy you signed up. Welcome to the event, sponsored by the Stock Whisperer Company and, of course, presented by me, Taz, of CryptoTunities fame. As you can imagine, we will cover a lot in the next hour, but you'll want to stick with me through to my giveaways and questions and answers. What I've done, and you will note on the screen, is, well, yes, giveaways will be near the end, just before we close. And of course, then we'll have questions and answers. What that will do is allow anyone who is here live that needs to get away by about 11 a.m. Eastern Standard Time, America side, or of course, that's 4 p.m. GMT for those that have come in from the United Kingdom or anywhere else in the world that knows what GMT time is. And so what we'll do, if that's okay, is that's how we'll continue. If I could have a yay, yeah, I've got yays in the room. Liberty says, yay, giveaways. Oh, absolutely. There's always giveaways with Taz. You'll realize that soon enough, because I'm here to add value to your life. Yes, sometimes you pay, but remember this. If you don't know what the product is, you are the product. And with me, that's never the case. So let's move on, shall we? We're going to share something with you today that reminds us of Hans Christian Andersen's kid's story, The Emperor's New Clothes. You might be familiar with that one. You know the story about two con men pulling a fraud on a narcissistic emperor? Obsessed with his appearance, they tell him and his court that they'll tailor him an outfit that can only be seen by the wise. Yeah, sure. The result, nobody admits this emperor is actually butt naked. Cause, well, there ain't no clothes, as simple as that. At the end of the story, he shows off his new outfit publicly. What a disaster. This reminds me of the Fed. And a boy suddenly shouts, "The emperor has no clothes." And the whole audience busts a gut laughing. Well, today, in case you haven't worked it out, I, Taz, will be the boy in that story for you. And at the end of this, you'll laugh with me, no doubt, but also realize how the game is really played at a high level. And most importantly, what you could do about it to profit. Anyone want to profit in this day and age where inflation's going up and costs are getting tough? Well, I do. That's why I do what I do. Please understand, this is not some conspiracy theory I'm going to take you through, because as understood by most, it can't be a conspiracy because it's been made legal and it isn't hidden. It's very public. Are you ready for us to pull back the curtain and put things into perspective for you? There it is. Thanks for attending. I've pulled back the curtain and now I'm going. I'm only kidding. Don't worry. Hang around. It gets better. But before I leave, or carry on, I should say, I need to take you through this. We aren't financial advisors, we're educators and professional retail traders, investors, speculators, coaches, and business people. In our services, we either show you how you can profit by teaching you how we view trading, entering and exiting positions, applying risk management, or we package the information and communicate it to you through social media and all our services like a trading room where you can join me every single day if you want to, where we share ideas and positions and what to do with them. We also offer coaching for a more personalized approach to your needs. This is all done so you too can profit. So whatever you do, follow us on our numerous social media channels: Facebook, YouTube, Instagram, Twitter. If you don't, you'll miss out. Please note, nasty comments, politics, racism, arguments may mean you are booted out of our room by our instructors. So be nice now. Let's get going. We'll leave time for Q&A, as I said earlier, so don't worry. Please drop your questions in the questions tab. You are in the main chat tab, so look along and you'll see the questions tab. Drop the questions there, and at the end, I'll take a look. and, answer those questions and give you some free giveaways for taking the time out to be with me. Otherwise, I'd be talking to myself. And of course, everyone knows what happens when you talk to yourself, or in fact, what people think. So let's look at what's going on in the, financial markets and really generally how it works and, in this thing called crypto by some. So here's the issue. Money is the key driver of economic cycles and inflation. It's not distributed evenly or simultaneously through an economy, only one transaction at a time. When printed out of nowhere by central or commercial banks, nudge, nudge, wink, wink, no, that's never happened before, it flows into the economy in ways that have distorted economic calculation. Now, economic actors, that's you and me, businesses, households, in fact, everyone is transacting in the economy. They now have to make decisions based on distortionary incentives created by the excessively printed money out of thin air Ponzi model we like to call fiat currency. The more money that's vomited into the economy, the more these distortions lead to bubbles and misdirected investment in the economy. No, that hasn't happened before or anywhere. Now, the business cycle is just a distortion of that money from Never Never Land. There is no longer the capability to measure the business cycle, corporate profitability, or the behavior of financial assets like interest rates, stock markets, commodities, crypto, or in fact, anything with a value attached to it. What's the obvious solution? Well, after all, the simple answer is always the best one. If being careful with money or resources is your goal, that is. So, what's the solution, Taz? I'm glad you asked. Just follow what big money does, not what they or the media tell you they are doing. It's one giant chess game, and retail investors like you and I are the pawns. We see it every single day in our trading careers and coaching, etc., etc. But we profit from it, and you can too. You know, the rich get richer, and you know the saying. You choose what looks like. You choose what it looks like for you, whether you get richer or poorer. How do we do it? Well, with various software tools. Anyone can have those tools and software, but they usually don't know what to do with it. So I could tell you the software, but it probably won't help you. Our services are designed in various formats to primarily deliver the what and the how. The what is about what's truly going on. We follow the money, you see. And in just a little while, I'm going to tell you what money's doing, not saying. See, what they do not want, what we want to do is follow what they do, not what they say. Then provide you with actionable information a little later on. Are you guys interested still? Do you want to know what's going on? Not what CNBC tells you, and Bloomberg, and everybody else, and asset managers, and hedge funds, and, well, everyone. The how is how we are using that information and how you can too. We package the what and the how for you, timing it according to what big money is actually doing now, with knowledge about current trend and where we are in the cycle, most importantly. I'm going to cover some of that just shortly. And that's why you're here, to understand how we view where we are in the cycle and profit from it. Let's take a look. The economy's got a structure to it based on the concept of the economic rent model. That goes back to centuries ago to this bloke called David Ricardo. Again, who cares? Well, Philip J. Anderson recently wrote a book, and he talks about the secret life of real estate and banking and really how the economic model truly works. Now, here's the important thing for you to know. Okay, the economy actually works in an 18 and a half year cycle, 14 years up and 4 years down. Basically, we had the last 4 years down event around 2007 and 8, just so you know. Only two things have temporarily, mind you, knocked that cycle off course. Anyone want to take a guess who's with me today live? What two things do you think knocked this economic cycle off course? Well, the two world wars. That's it. Nothing else. But afterwards, the cycle just started right where it left off after those wars, right? Isn't that interesting? Is this news to anybody? Well, you look at what's on the screen in front of you now. Everything works in this 18.6 year cycle. Roughly, of course, this is just a model, right? It's not to the second and etc. It's a theoretic model. However, it's been quite accurate to date, I must say. So this is the high level view of how the economy works. And you and I and everyone is part of this economy. No one exists outside of it. Nothing exists outside of it. Unless, of course, you come from Mars. But then, well, this wouldn't interest you. So there is something else you need to know. Okay. There's an enormous effort to conceal how the hand of the rich play at the poker table. You might have a clue about that by now. I certainly do. Well, so what do we expect in this part of the cycle then, Taz? Come on, share with us. All right, fair enough. I will. Just because Larry, Bob, Greg, and Liberty and Celeste and all those that are with me now have actually asked. Okay, they're saying, no, I didn't, Taz. You're just nuts. Well, welcome to Cryptopportunities. So, what do we expect in this part of the cycle? A continuation of normalization of the monetary policy cycle, i.e., and you've probably seen this already, interest rate hikes and increased public spending. For example, I just read recently Biden signing a rail deal passed by Congress, i.e., public spending is happening. In this case, workers' wages. We're also seeing this in sectors like clean energy, the microchip sector, and many others. Banks will start lending again. Okay, they have to, because in case anyone hasn't figured this one out, guess what business banks are in? Lending. So they can't sit on cash forever. All of this facilitates this cycle on your screen right now. All of it, everything. It all feeds into this cycle. Even the things that people don't think is supposed to be happening, funny enough, feeds into the cycle. That's what's amazing about it. Okay. And well, consider this. The things that drive the cycle may change, but the cycle itself doesn't. Also, everything happening is part of the greater economic cycle, as I said. It's not happening outside of the cycle. For example, take a look at this one. I think you'll love it. Markets will shift to a hope phase next year. This is 2023. And investors would be wise not to miss it, says Goldman Snacks. I call them Goldman Snacks. Anyway, Goldman Sachs said this. Now, as we know, you can't really trust what they're saying from a timing perspective. And of course, they have other motives. But yes, they're saying, I'm taking what they're saying, is we'll move to a hope phase. Well, this is what they're talking about with this over here. Okay, they quoted this on MarketWatch. They mean hope phase. Okay, which means we've had a pretty depressed phase right now. I don't know if any of you have read the news lately. Maybe you might have noticed it's a little bit depressing. But anyhow, we don't really care about what the news says. And that's why I want to tell you that really you just being pulled all around and your attention's been taken away by certain things, not only on the general economy, but of course a new sector that has been born a number of years ago. And that's what we're talking about today. This thing called crypto as well. Okay, we'll address that. But you need the bigger picture. And you are going to understand soon that the world as we know today is a hybrid. Okay, it's a hybrid animal from the what we call traditional finance system, and it's in a flux state. It's changing, evolving, and it's moving in a direction. And that's why I'm here to help you. And Cryptopportunities is here for you. Right. So let's take a look then. And One other note is, of course, before investors can get to the hopeful phase, they must grind through the rest of this bear market. Okay, that's what Oppenheimer and their team have said. Well, again, we don't really care what they say, only what they do. Sometimes what they say and what they do aligns, but sometimes there's so much bad news out there, or they so much, call it knowledge out there in the media, that you don't know what to actually peg a hat on to make the right decisions. So I'm going to show you a couple of things. What you're seeing now is simply part of the cycle. Initial recovery trends tend to be led by assets that have underperformed the most during the bear market phase. This is what makes these transitions so difficult to navigate. Anyone try to navigate this year? Anyone found 2023 a little bit, 2022, I should say, I've already jumped to next year. Has anyone found 2022 a little bit difficult to navigate from an investment, speculative, or trading perspective? Hands up, it's been a rough one. That's because of all the things I'm telling you now. But something else you need to know, the recovery when it comes tends to be swift and led by the types of companies that investors tend to avoid through the bear markets. But don't assume you know what they are without knowing how to follow what big money does and not what they say in the media. That's what we help with. I need to clarify something. I think it's premature to be positioning for this now for most untrained investors and speculators and traders. It's best to hold your horses unless you have an edge like we do at Cryptotunities. This will become clearer as we navigate this time together. Polite reminder, folks, we don't really care what players in the economy say, only what they do. Remember, earlier we told you what our solution looked like. We simply know how to track institutions who use privately organized exchanges for trading securities, i.e., we know how to follow the money and when and how to respond to that information. It's amazing when you can do that and tie in another few pieces. What picture comes, to life for you? Through the balance of 2023, it's probable a recovery starts to come together from a lower level, of course, meaning further downside price-wise. Anyone's ever traded with me will know that a price going up does not mean things are good, and a price going down does not mean things are bad. It's just what's happening in an asset, and the market's telling you something, and you need to respond to it. That's why we need to be trained in these areas and not run around without that kind of training. Otherwise, you're just shooting in the dark, really. Remember, as traders, we're best positioned to navigate this while using our training to closely watch what big money is actually doing. But prospects for transitioning into a hope phase of the next part of the cycle will be very strong indeed. Well, so what, Taz? Didn't join you to know about the macroeconomy. I am listening to so many other macroeconomists that I don't care. Good. I am glad you said that because, well, what does that mean for this thing that people are calling the crypto Ponzi? Well, you saw earlier on the first slide, I showed you what Charlie Morris from HSBC Bank, who's managed over $1 billion in assets, thinks. He thinks that anyone who calls it a Ponzi doesn't get it. And I agree, actually. Well, let me introduce you to DLT 2.0, the next cycle where only sound use case ecosystems will exist. Crypto is merely a marketing term created by those who never understood the innovation taking place, but needed a term to refer to what they viewed was happening. Oh, how dangerous is that? Unbelievable sometimes, really. Since then, everyone erroneously throws around the term as a catch-all phrase, crypto. Oh, it could be more flawed. This causes confusion and ridiculous decisions to be made. I must tell you, it is scary. One thing you need to know right now, there are three forces converging to form a tsunami of opportunity. A market crash. Yes, most people think that's bad. Well, it's kind of like a fire cleaning out garbage, i.e., it's great and necessary. The money, well, hedge funds Fidelity, for instance, BlackRock, Bridgewater, etc., are coming into this economic space known as so many things: distributed ledger technology, blockchain, crypto, you name it, digital assets. They are coming in hand over fist with money. And the third thing that is converging to form this tsunami is government regulation. Now, most people think, oh, that's terrible. Actually, it's required. And it actually started in 2020. Yes, it's not coming in 2023, 4, and 5. It's already here. Did you know that regulators, banking regulators, in 2020 told banks that they were allowed to be custodians of digital assets that people know as cryptos? Did you know that? It's already happened in 2020. What's happening now is regulation is just being reformed, you know, customized, because they're always a bit slow, aren't they? Well, let's take a look at something else. I want to show you another cycle model. This one has been around for years. It's called the Gartner hype cycle. What I love about things that have been around for years is nobody knows that it exists still. If they do, they don't know how to apply them all together to get the picture that's tradable, that you can profit from. So let me show you. Well, years ago, Gartner covered what happens when new technologies make bold promises and you discern hype from what is commercially viable. That's right. What you've seen in, I call it crypto 1.0, is, you guessed it, a lot of hype and stuff that wasn't commercially viable. Is it any surprise that it went bankrupt? Let me assure you, anything that's not commercially viable and is just hype disappears in time. Do you remember the internet age? Remember 1995? I don't know what you were doing around then. 1999, going into this new internet age. Do you remember how many internet companies there were? It was the new greatest thing. Everyone had a .com domain name and everyone was going to make millions. Well, only a handful survived, you know. But imagine if you threw out the baby with the bathwater. And believe me, that's exactly what happened. One renowned economist actually famously said, the internet email will come to nothing. It will die a death like the fax machine. Well, yes, thank you. I am very glad personally I didn't listen to that, I must say. But he wasn't fully wrong, because a lot of stuff disappeared. So if you were in the wrong places at the wrong time, yes, you would have lost a lot of money. But to say the internet was a Ponzi would have been a big mistake. I think you might agree, because you would have missed Microsoft. You would have missed Cisco, Google, that came around later. If you recall, it came around later, not in the first wave. And then you had Amazon, etc., Apple. Well, how many people threw money out on Apple and thought, "Ah, forget this," and then Steve Jobs breathed it to life? That was what I call Internet 2.0. You know, at that time. So we're kind of at blockchain 2.0, distributed ledger technology 2.0, so to speak, DLT. That's where we are, on the cusp. Let me show you something interesting. I didn't put this together. This is an old model. Can you see this? The trough of disillusionment. Look what happens. Supplier consolidation and failures. Well, you might have recognized some failures. We're seeing an opportunity in speculative assets at the moment. Great value, not everywhere, but in certain DLT 2.0s. In fact, I looked at a couple that I'm invested in. One's up 45%, the other 150%, when everyone is talking about a market going down. Well, I don't know what they're invested in, but I know what I'm invested in, and not everything's going down. By the way, did you know that what I'll show you next was a known part of a cycle? Look at this. Again, a known part of the cycle. Look at this. You might say this was a surprise. To some, it was. Yep. 3 or 4 big things at play here. Big bankruptcies are not uncommon to new technology industries, or the financial sector for that matter. Anyone remember 2007 and 8? Bankruptcies. Well, one could say perhaps that hasn't even finished yet. Like we've seen with FTX and Luna, it's historically quite normal. Now, if you were subscribed to CryptoTunities, you would know not to have put any of your money into FTX or on their platform. You would have self-custodied in your own hardware wallet and had everything still left behind. But, we called that years ago. In fact, it's part of our risk management get-go from the beginning. Big bankruptcies did not end the automobile, PC, or internet revolutions, did they? In fact, these bankruptcies tended to mark the bottoms of short-term pullbacks in those revolutions. I'm going to show you a slide that made me laugh. It's coming up now. Ultimately, macroeconomic factors regarding the trajectory of inflation, the Fed, interest rates, yields, and the economy will overwhelm headline risks. If this really is the second coming of the dot-com bubble, history says now's the time to buy as we're reaching maximum pain and are due for 2 decades of significant returns from current levels in the blockchain 2.0 industry that some call cryptos. Well, call it what you will. If you don't know how to navigate it, you might lose money. And just bear in mind, I'm not saying buy now. That's a timing issue. You want to be part of CryptoTunity's trading room before you do that. Look at this. This was quite funny. I love this. If there's ever a contraindicator, just read the cover of The Economist, and I'll joke. I jest. I do joke a lot, by the way. I think it's brilliant to have a sense of humor. You might agree. And be a little bit crazy. But then again, if you are joining investing and trading and speculating, you might just have a little bit of a, craziness about you. You are risking money no matter what you do nowadays, isn't it? Even leaving money in a safe, so-called like treasuries, which lost you 50% of your capital value over the last 12 or so months, could be seen as risky. Yes, treasuries. The thing you were told was safe. Yeah, well, again, follow the big money, and if they're in treasuries, be in treasuries. If they're not, don't. It's quite simple. Now, look at this one. And this is something, I did a calculation here. You might be interested to know this. Again, this is part of our risk management strategy, overlays everything we do. And one of the things I told our folks is, if you're going to speculate in this thing called crypto, you might want to, once you've made a profit, in other words, doubled your money, and in crypto, in the hard phase, it wasn't hard, was it? Making 100% on your money was not hard at all. So what I thought, and this was years ago, is, okay, if that's the case, overlaying my risk model and trading acumen, I will do this. If I put in $1, then when I make two, I'll take my initial dollar out. Then I don't have any capital at risk. And well, then I know I can sleep at night. My capital's not in, and I know I'm speculating with just profit, and my focus becomes guarding the profit only. Well, do you want to know what happened to me over the last few years? Nobody wants to know. Liberty might want to know. Bob might. Celeste, does anyone want? Oh yeah, they do. They do actually want to know. Leslie wants to know. So I'll tell you. For every $1 I put in, I got $16,000. Now, let me tell you something. I had to do that using $1 because remember, I took my money out. So, do you know what happens if you say you made $16,000 for argument's sake with nothing initially invested? The calculator goes in infinite return. So, we couldn't have that. So, for every $1, it turned out to be $16,000. That is, let me put that to you in percentage as a return on investment. 1,599,900% return on investment. Just turning one into 16,000. Note, I didn't say I was a billionaire or a millionaire. I'm just saying that even in the middle of what we knew was a hype space, I've just shown you we knew that because, well, it was known. Nothing's unknown. It's just a matter of how you navigate it, right? Well, I'm best positioned as Taz to help you out to navigate that space, right? Just simply because of my, majored in economics. I understand the crypto space, been around since pre the 2016 booms. I've been around for a few cycles in that space. I am to be around in this technological area that is being built on distributed ledger technology for years to come. And well, I've seen numerous iterations. Remember, when things first started out, there was no such thing as crypto, only this thing called Bitcoin. And the initial white paper came out and it was explained what it was put in play to do. It was supposed to be a decentralized blockchain, peer to peer transactions, trustless. That meant you didn't need to trust the folks from 2007 and 8 who destroyed the economic environment as we know it. And that's when it came up. And of course, ever since then, it's evolved. There's been a lot of Ponzi's, of course, but we know that. The hype cycle from Gartner, a well known institution, told us that would be the case in any new technology, not just this thing being built on blockchain. It's happened time and time again. Repeat, wash, repeat. Look at this. I love this slide. This is venture capital. Anyone know that venture capital is institutional by nature? It is the institutions. I used to work in asset management companies, and I can tell you, venture capital and private equity were next door to one another. And down the road, you might find different departments, of course, and then you've got your regulatory departments, etc., etc. Well, they are institutional. Yes. So this is the funny part. Did you know that venture capitalists and private equity are regulated right now and have been for a long time by the US Securities and Exchange Commission and relevant regulators around the world? The SEC already regulates venture capital and private equity. Do you want to know who was involved in FTX, venture capital, and private equity? Pause on that for 1 second. So what we've heard is, of course, crypto is a Ponzi. And then regulation will fix that. Well, I'm here to tell you that regulation's been in place on the venture capitalists and private equity that were invested and made FTX the centralized exchange, which crypto was designed to get away from. It's not central, it's decentralized. Do you see what's going on here at all? Do you see a theme? You will by the end, I hope. Historically, the halving of supply. Let's talk about Bitcoin now because we're talking about cycles. Well, historically, the halving of supply in Bitcoin, that means there's a limited supply of Bitcoin, okay? And this influences the crypto cycle, which influences this space for now. So it's very important to understand how all these cycles fit together in the broader economy. As we've said, everything happens in the broader economy. Nothing happens outside it. Otherwise, we're not on the planet Earth. Right. So in this case, this is something I put together for you. This is what happens. There is a limited supply of Bitcoin, and every 4 years, the supply is cut in half. And that's why certain folks are thinking this is potentially a great store of value because, well, we know what we're dealing with. And, well, that's just one side of the equation. The other side of the equation, if you look at this 2016, this is a technical chart of what happened to the price. Right here in 2016 was pre the actual halving of supply. 12 months pre that was here. Look what happened to the price. Okay, then we went down. And then 1 to 1.5 years after, look what happened to the price. This has been happening in cycles time and time again. And it's been a major driver. Well, when I took it anyway, we're 513 days away, and that was some time ago. In other words, last calculated on the blockchain, that's around about March 21, 2024. Now, I don't say that to say speculate in the space. I don't say that to say anything except we're talking about cycles. So, of course, I've had a strategic vantage point and view on that. And this is my high level strategy then. It makes sense, doesn't it? I would look to accumulate. Now, does that mean I'm accumulating now in the bear market because I'm a technical trader and I can see some further downside? No. it means it's a high level strategy, and I'll look to cost average or look for swing trades and cost average dependent. This was my approximate time frame last quarter of the year. Guess what? Yeah. First half bull cycle starts 2022 March. 12 months pre Bitcoin halving, the boom starts for the entire crypto market. Here's the Bitcoin halving. Bitcoin supply will be cut in half. The cycle will peak. As you remember that very first slide I told you, the entire economic cycle that we're in, by the way, we're in the second part of it, whether people feel it or not. Yes, things will change. In other words, people won't invest in speculative because asset, or call it interest rates are high. So they'll start switching into other things like commodities. Do you remember that old dead duck called gold? Well, it might just have a little shine time in this part of the cycle. But the entire economic cycle is in the second expansion at this moment in time, although it doesn't feel like it. Whether you feel like it or not, that's where we are. And that's why people miss out on opportunities, because they're going to be acting according to feelings, not where the money is flowing. Well, not us. And we know that around about 2025-6, the general cycle peaks, and probably this .com or new .com space called blockchain slash crypto distributed ledger technology 2.0, whatever you'd like to call it. It is a technological innovation built on something called blockchain, which allows, yes, this is the key, an entire economy to be built on it without third parties like banks. Totally transparent. That means nothing's hidden. Now you get worried and say, oh, my transactions are not really. They're pegged to a wallet address, but everything happening is transparent. Therefore, Ponzi's like FTX can't happen. That means FTX was a centralized business like most when it collapsed. Exactly what this space is trying to get away from. But anyway, so we remain committed to our boom cycle 2023 thesis and believe that now's a good time to start building our blockchain 2.0 shopping list. Well, no doubt you've guessed by now exactly what we've done for Cryptotunity's Room subscribers. We refine and add and have released, call it version 1.0. We'll refine it as we go and as the cycle plays out. As soon as the price action starts to improve and Bitcoin shows us that it wants to enter a new boom cycle, likely within the next few months, we'll become big traders. Okay, so let's take a look at something else. Cycles and tailwinds are converging to form a tsunami of gains, remember, to those with the correct information and understanding, which we bring, and losses to the ignorant. I'm going to say that again. And losses to the ignorant, the untrained. It's caused a hybrid effect. This merging of the old economy and this creation of a new one is causing a hybrid effect that we help people navigate with the correct information so that they can profit if they want to. If not, they're probably saying crypto's a Ponzi. In context of this presentation, though, you now know why that is, or you will by the end. Again, three forces have converged to form a tsunami of opportunities, remember? Market crash, big money flowing into the space, yes, still, and government regulation, which is not a bad thing. Let's take a look at this one. That is the total market cap of this space that was known as crypto. I don't really personally attach a lot of value to the way that market cap was calculated for this space. I've shared with our subscribers why that is. But nonetheless, what is important to understand is a flat line scenario peaking here and coming down to this level. Sure, it could go down even further to about here. That's fine. But did you know from here to there, including the crash to where we are now, is a 13,613% increase in market cap from just 2015 to today? Anyone hazard a guess that this might be a growth space? Personally, I can say I did that calculation. Okay, of my experience in return on investments, which I shared with you earlier on, $1 becoming 16,000, and to me it meant this thing meant 1,599,900% return on investment. It's been insane. But as you can imagine, it is the Wild West. It requires strict risk management, and that's what we do as disciplined traders. Okay, always and forever. And again, as I said, we're not financial advisors. Take up with your financial advisor where to put your money, of course, because no one at all can lose money for you like they can. Just kidding. You might find that might be true. You might even be a financial advisor in this room, in which case I apologize. But you can come to me and I'll tell you how to trade crypto, and you can advise your clients accordingly when it's regulated and you're happy and all the money's been made, of course. No. So I tell you what, institutions use privately organized exchanges for trading securities without exposure until after the trade has been executed and reported. If you want to know more, you might want to buy Stephanie Kammerman's book using the link above. This one, The Dark Pools. She did a great book on how those guys operate and how she looks at, what they do and how we broadly all do, in fact. Great book. Over here is all our media channels, social media channels. You definitely want to follow us on these social media channels of your choice. YouTube's great, Twitter's great, Instagram, Facebook, great. You get a lot of information like I'm giving you now. And if you don't, you will miss out. Make sure you follow us. Search for Crypto Opportunities. Make sure that all the alerts that come out, like on these channels, that you're always notified. So make sure you sign up to notifications, and we'll keep you updated, right? Follow us. Hey, let's take a look. These are some of the folks that are in our room. Good old Otis. I saw him here earlier on. And, he was saying, why don't more folks tell you this? And then said, I guess they don't know. Then he says, this is exactly why the portfolio have been spot on, basically because of the kind of work that I do. In other words, navigate that hybrid space of the old economy into the new, like most people struggle with at this moment in time. And we have done so many things together, like trades. This one was one that was actually a Bitcoin miner, in other words, that makes the blockchain possible. And we traded a stock. This was Mara. And you could see the returns over here just a while. I can't remember if it was over a few days or so. Probably that's the kind of time frames we use. But hey, there you go. That's the kind of thing that we do. Ricky Lee says he still loves it. He obviously is in Crypto Opportunities. Thanks, Ricky. This is a trade we did very recently on a stock related and affiliated to this new economy, which I brought to this environment. And I traded this one up. Personally made 400 and something percent on it. It was just over 400%. That was done in a 35-day period of positioning, and in one day the stock shot up 30% plus, and that's where that profit of 400+% was made. So that's the kind of things we do. And then we have native crypto opportunities. When I say native, I mean operating outside of the financial system's normal platforms like banks and trading exchanges, etc. Otis did tell me an interesting thing just the other day. He said that Tastyworks is now going native crypto, as in bringing in a wallet of their own that's self-custody. Because, yes, as I've said 100 million times before, I can assure you that crypto, as what people think is crypto and blockchain 2.0 and DLT, it's not a sideshow, folks. It is the main attraction. And I have been saying this for years. If you don't know how to trade native crypto, you will be left behind. Pretty much like in 2000. Remember when you could read and write? Everything in the world in schools was called literacy, read and write. Then came a time where if you couldn't operate a computer, you were effectively illiterate. Well, it's happening now again. And this time, folks will be illiterate financially real fast. And it's happened right now, and it's happening at a rapid pace in case you missed it. But that's why you're here. So What do we do to help? Well, we've got a trading room, like I've just showed you. If that's your thing, you want to be around and can be around for 11 a.m. Eastern Standard Time, I come onto the mic or drop something of interest or just keep people notified. I may be there physically. I am most of the times live, in other words, not physically. That would be weird. I don't know how to project myself into a digital environment yet, but I'm sure it's coming. So that's what we do here. We've been going strong for 2 years plus. Can you believe it? 5-star reviews on Trustpilot, independent reviews, obviously. We've got daily meetings, trade opportunities, all kinds of opportunities, and will help folks navigate this space. And, big money continues to pour into the blockchain industry. As I've said, it's not stopping because people think it is and hope it will and demand it does. It won't. We also offer a more tailored approach, coaching. I recommend that. Normally start with 2 hours if you don't know where you want to go. For instance, you might find, hey, I need extra income. How do I go about that? Well, you've got to get set up. There's a way to get set up right to win. And you might say, hey, you know what? Ultimately, I want to replace my current job. And I think that, trading the financial markets could be the place for me. Money sloshing around there. I want to be able to take my share of it. Well, whatever that is, this is a bespoke service for you, coaching, and you can sign up there if that's what you want to do. And well, there's some of those reviews. I've learned a great deal about crypto, but even more about trading in general. Hey, Mike, thanks for that comment. And he's right. We don't just teach you about crypto, we teach you about trading. And when I say trading, I don't mean trading like you think, but how to view price movement and price action on a chart, because each chart is a market. Most people think that there's something called markets, but everything you want to trade, Google is a market. Apple is a market, etc., etc. Well, for those that have been with me a while, as in this event, we're getting to the part that you came here for: free giveaways, and of course, questions and answers. Now, I'm going to close off just shortly. You are going to get this recording, so don't worry about it. It's probably like drinking from fire hoses because I've given you so much wealth of information. That's fine. Go and review the actual recording coming to you. I believe in the next 48 hours, you will get that. You'll get a link to it, and you can go over it as many times as you want to. And I'm just looking at these things. So it really touches me, to be honest, that the hard work we put into crypto opportunities and to all our services that we offer into our social media channels, it's impacting people positively. That's what we want to do. In a world full of Ponzi's and nonsense, we want to point it out. We've actually helped our loads of folks, in fact, bypassed a lot of Ponzi's if they listen to what we said. Our traders got out of the crypto space in November of 2021 to lock in their profits. And everyone else was free to go down in flames. Some folks might have gone down in flames, but it wasn't because we didn't say get out. We did say that we had some speculative plays during even this bear market crash. There was some good, speculative trades. Whether shorting, which we did, and going long, we did that too. So, but on the whole, we told the ultimate exit period, and that was November last year. There'll be some folks in this room who can attest to that, actually. Part of that service, that's what we said. I think Rick is actually here, and he shared publicly that he doubled his portfolio, and he exited. So good for you, Ricky. That was good news, and well played to you. Well played. I'm really proud of, basically, as one of our subscribers and students learning the space. He did a great job of it. So, what else is there to say? But go check us out. We've got independent reviews, so we're not just coming out of nowhere. This is what folks say. And have you ever noticed folks can be brutal? If they don't like you, they tell you on Trustpilot. Fortunately, to date, we've been fine. Okay, I think I had one bad review once, and that's because I fumbled with some technology. My speakers weren't right and stuff was a bit off. Don't blame them. I hold myself to a high standard, probably higher than you hold me to sometimes. Okay, some of you are just tough. Well, anyway, extremely helpful and patient teachers for any level of trader or investor, Bryce said. Thanks, Bryce. But the last part, I love what he said. He said, always entertaining as well. Well, yes, I've been known to crack a few laughs, okay, and make people chuckle, sometimes in a really crazy way. But then again, this world, if you haven't noticed, isn't a dry place of boredom. It's insane. Well, I've got some giveaways for you. Who's ready? No one's ready. Okay, I'll sign off. Bye. No, just kidding. Here they come. Liberty is ready. Bob is ready. Funky will take one. Well, here's some giveaways, and these are giveaway ideas, just to make it clear. I'm not exactly giving away cash. Remember, I'm cash strapped. You're wealthy. That's why you're here. Just kidding. Well, here you go. Here's a couple. We're going to be talking about Ethereum, Bitcoin, NVIDIA, and Unity. Somebody asked me earlier, can you tell me about some stuff in the microchip industry? Well, you might notice one of those happens to be in the microchip industry or the chip industry. You know, that kind of industry. They're even doing artificial intelligence type chips now. And well, they are a key company in the blockchain because a lot of these guys' kit is in mining equipment used to operate blockchains. So that's your giveaways. And you think, well, I knew that. That's not very helpful. Well, here's what you didn't know. You're probably going to figure out by now there's always an angle with Taz to help you. Here it comes. Are you ready? Well, there. That's what I would be doing to position myself. Unity software, I would go long above 45 bucks with an upside target that's 55 bucks and beyond. Remember, you need to be able to trade this. I'm not saying buy this. I'm not a financial advisor, but that's what I'd position myself for. I'd look for the setup in Unity software long above 45 bucks, upside targets of 55 and beyond. Of course, it all matters about the cycle, and that you got to follow and you got to join our services to know the timings, right? So $35 below that, I would go short. Hey, if in case you know, you asking what's long and short, well, buy or sell, right? You can make money both sides. That's why we haven't been too depressed in this financial bear market because, well, we can short stocks as well. Right, $30 is where big institutional investor interest has been. So we are looking to be long above. That's what LA means to me. And SB is short below, long above and short below. Right, so if big money, I told you we know how to follow it. If big money is buying or selling at 30 bucks, it's a big price level to them. So we would be looking for a trade long above that 30-buck mark and short below it. On Ethereum, well, we'd go long above $13. $13. Look at me. That's how far it's going to go down. Well, $1,350, I should say. We've got upside targets of $1,500, $1,700, and $2,000. We are short below $1,000. Should the price fall there, we'll go short. Targeting in $50 increments, $950, $850, all the way down to $600 in $50 increments. Should it go there? But we know how to trade it. Now note this. This over here is what institutions have used to tell us what they're doing. It is a derivative of the real thing. Notice what I've said. We don't trade this. We just note what big money is doing. Remember, we can follow big money, not what CNBC says or Bloomberg, but what big money is really doing. Right. On this trust over here, which happens to be Grayscale Trust and might go bankrupt one day, that's why we don't trade it. Big institutional investors have shown us that their price level of interest is $8.50. We would therefore be long above that and short below it. And it has a price that equates to Ethereum. You could work that out for yourself. If you go to the website of Grayscale, look at this, you can see what this means related to this and work out what institutional money is doing. On NVIDIA, a chip stock, graphic cards, and so much more company, we would go long above $180, targeting $190, $200, and $250. Yes, that's right. We'd be short below $150, targeting $140. 130 and 120. Big institutional investors, i.e. big money, is targeting that price level. $150 is of interest to them, and therefore it's of interest to me. We would therefore be long above that price or short below it. Here's your terminology key for LASB and TGT in case you missed it. Bitcoin, we're long above $20,000, targeting 22,500 and 25,000 for now. If you're in our trading rooms, of course, it's going to be live action, play by play as things roll out. But I had to give you something at this particular moment in time, i.e. 3rd of December 2022. We're short below 16,500 though. We're targeting $14,500, 14,000 and 13,500. We think Bitcoin could go down somewhat from here. Remember, when prices go down, it tells us nothing about an industry. And when it goes up, it equally tells us nothing about an industry. We just make money out of it, up or down. We don't trade this. Just notice, we don't trade this. But there is an ETF known as BITO. And yes, big money has showed us what they're doing. Big institutional investors' interest price level on BITO, therefore, is $10. It's a futures-based ETF based on Bitcoin. In other words, it's a derivative of Bitcoin. And big money's told us they are interested in $10. Therefore, we would be long above $10 and short below it. By the way, for those that are interested, I told you about a portfolio that we released to our subscribers in our trading room, and I'll show you that a little bit later, what our trading room detail is. In fact, I showed you earlier on, and it looked something like this. But what you'll note is that our risk position on every single one of those tokens or cryptos or coins or whatever you want to call them had the same risk per position. That's right. So even if we were caught out on, say, Lunavera that went bang, well, we'd lose, yes, you guessed it, a percentage of our portfolio, not everything, because there's no such thing as just holding for dear life and hoping for the best in our world. We know how to make money with discipline of risk management. We know what the volatility is of what we're doing, and we know where the risks are. And we know we don't put in more than we can afford to lose. Remember, I told you I took all my capital out years ago, and that's why I can now speculate the space, sleeping at night soundly, and of course, not missing the opportunities. Well, here's another part of the day. For those of you that need to get going, you are free to go now. This was the main stuff. I'm hoping that you got something out of this event. I certainly enjoyed bringing it to you. I hope you got a lot of information out of this. And if you didn't, you might want to listen to this one more time, and you'll pick up more and more every time, I guarantee you. And, well, if you need to go, drop off. If not, stick around because things get interesting now. Live Q&A. This is where things get really interesting. Okay? So if you don't mind, why don't you drop your questions in the questions tab? I'm not going to see your questions in the main chat tab. In fact, I'm not looking for them there. I'm going to the questions tab in the live room now, and I'll look for questions related to what we've spoken about today. In other words, if you ask me what I think of the latest Ferrari mag wheel, I might not answer the question because it wasn't related to today. But if you ask me what was related to today, I might answer your question. So please keep it relevant, and I'm going to try and answer all of them. If not, we've got your email addresses, and I'll give you some details right now. Here they go. Again, follow, sign up, make sure you get notified on YouTube and Twitter and Facebook and Instagram. Search for us. There we are. That's right. Otherwise, you will miss a lot. Believe me. Right. And if you feel you need to reach out to me on email, that's my email address, taz@thedarkpools.com. And if you are worried about dark pools, it just means institutional exchanges where they hide what they're doing from you. It's nothing ominous. So do send me an email, and we'll take it from there. Great. Well, I'm going into the questions tab. Let me see. Okay. Kate, best semiconductor stock? Well, Kate, I think I answered that for you. NVIDIA, right? I'm looking at that one to play right now personally, and I'm not a financial advisor. So to say best semiconductor stock, well, depends what metric you're using. But I can tell you big money is involved in NVIDIA. So that's what I would do. That's what I'm actually doing. Right. Liberty Bell asks something. Is it possible to trade both sides of crypto? I mean, the actual coins, not by shorting in the stock market. Yeah, Liberty, that's a fantastic question. The answer to that is yes, you can short crypto. It is an evolving space, of course. So what's happening is traditional finance platforms like IBKR, that's Interactive Brokers, or Tastyworks, etc., are making trading crypto, even Robinhood, I note, are making trading crypto possible, which means that if you can sell on those platforms, buy on those platforms, you can sell too. So, and yes, you can trade both sides, going long and short. And in the real life crypto, as in the real deal, well, the way you go short, of course, is being on one of those exchanges that exist, like Gemini, Kraken, FTX is gone now. So bye bye to that. The risk is obvious. And you've got Binance and on those platforms, dependent on each platform, they will ask you to open a margin account, because most platforms will want you to open a margin account if you go short, and it's possible to short crypto that way. Yes, I did it myself. Personally use Binance, and of course I don't have all my funds there at all, only what I want to trade for a specific point in time. I always self-custody my cryptos on a hardware wallet, and I am the only one who has the keys, and you would have to pry them out of my cold, dead hands. Now, don't get any funny ideas. Right. Liberty, is Bitcoin the only coin that has limited supply? No, it's not. It's not the only coin that has limited supply. There are others. However, do not get too tied up about limited supply, because that is only one metric and tells you nothing. Okay? Because too many people get tied up about one metric, but they don't know the flip side. And I've said this many times before. There's supply, but if I say supply, what else exists? Demand. Now, here's the problem. It doesn't matter that there's limited supply for Bitcoin. Have you noted the price is going down? That means demand is probably more important. And there is a bunch of metrics we use. I've given my subscribers about 12 at least, or 8, and I have told them how to do your own research on something. But nothing is as simple as that. Again, when you ask a question with Taz, you will get the answer you need, not what you thought you needed answered. So that might help you even more. So Funky, Liberty Bell, no, there are many. Okay, he answered right. Kate Lees, what was the biggest percentage pullback? Kate, I'm not sure what you mean by that. What was the biggest percentage pullback of what? A particular crypto? I'm not quite sure. If you could just give me a bit of an insight on what you meant by what was the biggest percentage pullback. If you're talking about, Bitcoin, or, generally speaking, you're talking about 80-85% in previous cycles, up to is normal to the bottom. But again, that doesn't tell you anything, because this time it could go to 95%, right? But if that's what you're asking, that's the answer. Celeste asks, Taz, do you have an opinion on where Bitcoin will be by the end of 2023, please? Yes, I do, Celeste. It will be on the blockchain. That was a joke. I hope you caught it. Where do I think Bitcoin will be by the end of 2023, please? Well, you might know that I am a trader and I don't have a crystal ball. So if I told you, I would be lying to you. And I don't like lying to people. So where will Bitcoin be by the end of the year will be determined by many, many metrics, i.e. demand and volume, etc., etc. But what I can tell you is I have levels to the downside and the upside, and my levels go down in increments. I can pull up a chart for you now. In fact, I'll do that for you. I'll show you. RJM, what does your offering look like? RJM, my offering. Well, I have coaching that is bespoke, and that is I take you where you are, and so it is custom designed for you, and we take you on a journey depending on what you want to do around trading. Setting you up software wise, really just getting you started from wherever you are. Then we've got a trading room, and what does that offering look like? Well, as I said, there's enormous amounts of information. You get my mind in the service. Okay, that's why people come there. Apparently, that's what they told me. Um, and what do you get? Well, at 11 a.m. Eastern Standard, that would be 4 p.m. GMT, I come live onto the mic and I bring tradable opportunities to people that they could look to do something with. In other words, I package the info. I tell you what I showed you in the free slide. Do you recall what I just showed you now? And that's the kind of information you get. Of course, it's packaged in different ways. And you need to follow us on social media because I'm bringing out new products all the time. Okay. I listen to my customers and, well, I've got so many ideas to help. The idea is this, though. You tell me, are you wanting extra income? And would you ultimately one day want to replace your current job? Now, you don't have to. You could just want extra income. That's cool too. Well, we do that around the trades we bring. You, of course, have to know how to trade. And well, we teach you. We can take you custom. I did a boot camp just last year, and that was about a 4 or 5 day boot camp. Reviews are that were pretty good, I must say. So in other words, people took something out of it for their trading. Some folks, I know one of our guys, he wouldn't mind me saying this, but Bill's been trading since the 1980s. That's what he tells me. And he said that he learned some stuff from me every single day, which is kind of humbling, I'll be honest. And saying that he upped his portfolio just recently by 30%. That's on Trustpilot as well. So that's the kind of stuff we do, really. Really interactive in that hour. And it's community-based room. So, you go into this community room around 11. Now, it's open 24 hours a day, 7 days a week, but I'm not there 24 hours a day, 7 days a week. I come in for a morning meeting. I'll talk about the markets that we look at. You can come in and say, can you look at this stock or chart? I'll do that for you. No problem. So hopefully that answers that question, RJ. What about options and options market for the coins? Does that exist? Liberty is asking a lot of questions. Yes, it does. It does. But what you need to ask Liberty is it available to you as a retail investor? And the answer is no, not directly for coins one-to-one like that. Okay. There is an exchange called Deribit. It is the most advanced options platform available to options trade cryptos. And well, it's not even open to me as a UK investor because you guessed it, institutions want the piece of cake without you. So there are ways to trade via options. For instance, I trade things related to crypto with options like miners, Bitcoin miners like Mara, Riot, MTTR was something else I do that is in the, you might have heard of it, in the metaverse space. Okay, just means software and what's been built. Another one I did, Unity software, which I brought to you free. You can trade all those with options. So can you make money out of blockchain 2.0? Yes, as it develops and advances, sure you can. However, the key is, can you find what's related to what? Do you know what to look for to trade? We do. So yeah, hopefully that helps. Anna, can you repeat how interest rate hikes can impact crypto cycle and seasonality in the coming 2023-24? I'm not going to repeat that, Anna. It's probably better if you just take the recording and listen to it again for yourself, simply because of the context, and that will help you. But what I can tell you, how will interest rates impact crypto cycle and seasonality in the coming 2023-24? Well, it works something like this. Right now, crypto is correlated to, say, the NASDAQ 100 and the S&P 500. In other words, the stock market is a speculative marketplace. Most people don't know that. They think that stocks are fantastically safe. Actually, from an interest rate perspective, they are speculative assets. That's why certain stocks collapse when interest rates go up and do better when interest rates go down. Now, there's a few things happening. We are going into a peaking interest rate cycle that will level and become a new norm, and the markets do not like uncertainty. So as we are climbing, the market will play out certain ways. Speculative assets will have a heart attack, which they've done, like technology. However, what the markets are and do is forward looking. So they know that at some point, the market interest rate cycle will peak and they will move, therefore, before that actually happens. So we will watch institutional investor flows and we will then determine when it's going to happen. So has it impacted the Bitcoin cycle? It may have pushed it around a few months here or there, but generally, as I said to you, everything that takes place in the cycle is part of making things happen and doesn't really change it. It might play out slightly differently. So right now, I still don't see things changing for the crypto bull market. I still see it happening. Might happen a bit later. We're starting to see signs of the crypto markets, bull starting to want to take place. And that might mean the price moves down further. Okay. So don't think when I say the bull market will take place that suddenly it goes north and you go and buy. Again, that's a timing question. And but no, I don't see the crypto market as destroyed. And some of them will be. Okay. Again, it depends what you view as the crypto market. Again, terminology is a dangerous thing. Blanket statements are terrible things too. So hopefully that answers the question. And together with repeating the video recording, it will help you out. Liberty, what do you think about the NFT space and the coins related to that market? Great question, Liberty. Thanks for that question. Good question. What do I think of the NFT space? Funky sit in this room, and most people that trade with me know what I think of the NFT space. Excuse me whilst I laugh. Now, the reason I say this is, what do you see NFT as? What does NFT mean for you? So again, everything needs to be defined, and where you're coming from needs to be defined. Therefore, NFT, folks, means non-fungible token. It is a technology, and basically it has a use case. The best use case for NFT I have already been identifying, and our subscribers already know what to invest in or look to speculate on, according to some research that I've done. And why? Because it's got a use case. Now, that means NFT technology is fantastic. Why? Well, it gives people ownership rights over content that they've created. Like, for instance, if I created a video and I wanted total control over it and ownership, copyright, in other words, all as I had to do was put it onto the NFT blockchain it as an NFT. And that's why recording artists, musicians are so excited about NFT. If you mean NFT as a little JPEG or picture, a baboon or ape that sold and sold again, or a tweet, the very first one that was ever tweeted, then bought for $26 million, now worth nothing. If you think I think that's a great idea, the answer would have to be absolutely not. Hopefully that answers the question for you, Liberty. What do I think about NFT space? I think the technology is great. I think the idea, once again, of NFT being used as selling little pictures everywhere. Clearly, if you bought 100 pictures, they might be worth nothing now because they don't have a real use case, unless they have a real use case. So am I against NFT? Absolutely not. I love NFT technology. What I'm against is anything without a use case and basically a way of making money for itself as a project. And I have a few views on that myself. But am I invested in NFT? You bet. But in one of the biggest and best use cases out there right now, by one of the biggest founders of one of the biggest crypto projects ever created, who came up with the concept of smart contracts, which I think is pretty clever. So yeah, that's what I think of NFT. All for it, but not just used in a speculative, silly way. Any other questions? Oh, Anna said to the answer of the question, thank you, Taz. This is what I want to hear. Yeah, no worries. That was great. So yeah, any other questions? If not, I'm going to sign off now. All really great questions. Thank you very much for your time. Above all, hopefully you got something out of this. Hopefully some of those questions were a bit of an eye opener, the way they were answered for you. If you want more of that, more of you ask one question thinking that I'm going to answer you one way, but give you the answer you really need stuff. You want to be in our crypto trading room because that happens all day long. And that's where folks kind of learn stuff that they didn't know. And remember, my experience in the space is I'm able to actually answer the question you don't know that you're asking. And that will help you be in a more, transparent way, I think. For instance, if someone asks me, is NFT great? And I say, yes, they'll go buy a picture, a JPEG. But I need to explain to you what it is, what I'm interested in about the technology, and how the use case can be used, and what I've identified is already using it in an intelligent way. Therefore, not a Ponzi. In other words, I don't blanket paint anything. Right, good stuff. Celeste, I was. Thank you for reminding me. Celeste is reminding me. I need to show you a stock chart, don't I? Okay, let me get out of the presentation. I'm going to fire up my charts. I'm going to show you something. And you can please remind me what I was going to show you. I haven't had a great deal of sleep with a little 2-year-old. And my daughter, she keeps me awake sometimes, as you know. And so, yeah, Celeste, what did you want to see? I know I was going to show you something on a chart. It was related to something. I could scroll, but if you could tell me, let me see. Okay, you asked, Taz, do you have an opinion on where Bitcoin will be by the end of 2023? Right, okay, let me do this. Let's take a look, shall we? So let's, just so I know, you can answer this in the main chat if you will. Anna, can you believe it? She is. In fact, she's almost 3, by the way. Anna's saying, oh my goodness, is she already 2? Actually, she's turning 3. So yeah, technically she's 2, but not. Yeah, time flies. Right. So Celeste, yeah, if you could tell me what your trading experience is, if you've done any trading in experience before, or you experienced trader, do you trade in any one of our rooms? I kind of then can help you from where you are. Let's put it that way. Celeste, you still around? Celeste does mainly Forex now, but did trade stocks. So you understand trading. Okay, so you say, where's it going to be from now? Well, again, Celeste, let me show you a few things. Now, you may or may not know this in your trading. Of course, I've never really met you before or even coached you or anything. So I don't know what your experience is trading, how long you've been doing it, and if you are consistently successful in making a profit in the market. So I'm going to show you a few things. Of course, what we are in right now, Celeste, and I'm going to paint this for you right now by doing this over here is, of course, we're in a downtrending channel, which means that this asset class that you're looking at in this case happens to be Bitcoin to the United States dollar. And this market that we're looking at is a Bitcoin. In other words, there's many markets. Most will say there's a crypto market. Actually, there's not. There is a Bitcoin market, a Ethereum market, etc., etc. This particular market called Bitcoin to the United States dollar is in a downtrend. Do you see that? It is in a downtrending channel. And therefore, what we're looking at now in Bitcoin, this over here, is a range. It looks like we're losing this price range, and therefore, because we're in a downtrending channel, the most probable next move would be down in price. Don't know if you agree, Celeste, from your Forex trading experience, but that's what's happening over here. Therefore, the question to ask is, where is the most probable next move? Well, to around about the 17,000, okay, which we've just hit now as one level. Then we've got some levels around 12, 13,000 and between that. Now, where will it be by the end of the year will be dependent on the volume that comes in and when the sellers, start coming in or the buyers come to prop this up. What's needed in this market right now is immense buying that will change the trend. And what I mean by that is this trend channel that is now pointing down needs to be broken, and we need a move away, consolidation and testing, and then a new trend to be formed that is up. And that is the time I'll go for high probability trades long. Until then, I'm looking at high probability being short. So where will we be by the end of the year, by the end of next quarter? Probably lower until we've put in a bottom and finally break the downtrend. Celeste, I hope that helps you in your trading of Bitcoin to the US dollar. Anyway, folks, thank you so much for your time. Can't answer all the questions. You got my email address, and yeah, please use it. And to those that haven't joined us live but see the recording, thank you for joining us and signing up. And if you want to know where I am, you do know now. If you want to know how to get hold of me, you do know now. If you want coaching to get to the next level, wherever you are at now, you might want to take up some coaching. Had someone the other day, by the way, she said, I want to take up trading. And we had some email discussions around, moving forward in a disciplined way. And she realized she didn't actually want to make extra money out of this industry. And of course, we gave her money back because it was better for her. And I don't want you to do something you don't want. You might take some coaching with me for a few hours, and it might sort you out to the point of knowing what you really want to do and how to really view these things. Some clarity. A couple of $100 in trading in a few hours will save you a lot in the long run. So you might want to do that. That's up to you. Have a brilliant rest of the day. And what I'm going to do for those that are in the room is I am going to drop my email address again for you. For those of you that are watching, just remember, even those that are in the room, don't worry. I did show it in the slide, in the presentation. It will be given to you, therefore, in the recording. But here you go in the main chat. You will see my email address has just come up right now. Have yourself a brilliant rest of Saturday, a fantastic weekend. And this is Taz of Cryptotunities fame signing off. Hopefully you loved this event as much as I did preparing it for you. Hopefully you learned something from it. And remember, sign up by following us on all our channels that we have on social media. You might just learn a few things for what's coming. Speak to you soon. Bye.